Namaste. Today, let's see how debit and credit is applied to each transaction. Before that, let's talk about basic terms, which are sources of fund, how the sources of funds are treated, and application of funds simply means liabilities and assets. Liabilities. Liability is an obligation to repay it back. Asset is owned by the entity. These are the two components today we will discuss, and we will more focus on how to record a transaction using this as a fundamental key to apply debit and credit the transaction. First, we'll start with liabilities. Liabilities of are two kinds. One is external liability, the other one is internal liability. First, we'll start with external liability. External liabilities are those the funds mobilized from the third parties or other than the owner, which consolidates as external liability. Internal liabilities are those which is sourced from the owner, which is sourced from the owner. Now, in internal liabilities, we have three obligations. One is capital, the other one is profit earned during the year, the other one is retained earnings, which is r- reserves. Reserves basically. These are the three components in internal liability. First, we'll discuss about capital. Capital are those which is invested by the owner. Now, when the capital is increased or when the additional fund is funded by the owner, then the obligation will increase. This is the basic fundamentals. Now, when the profit increases, then obligation to repay profit to the owner also will increase. Yes or no? Now, with using this, let's see how debit and credit will apply. Now, profit. How does profit is calculated? Profit is equals to income minus expenses. When income increases, it means profit also increases, which leads to increase in obligation. Therefore, incomes are credited. In a similar manner, if expenses are increased, then profits will increase. Therefore, whenever the expenses occurs, it is debited. Now, this is the basic fundamentals of liabilities or sources of fund, which is categorized as obligation to repay, which means credit the transaction. Now let's focus on application of funds. Application of funds broadly, assets. Now assets are owned by the business, therefore is debited. What does debit say? Owned by the entity, therefore assets are debited. Let's summarize once. Now, assets are owned, therefore it's debited when it is increased. Liability is an obligation to repay, therefore it is credited when it is increased, and vice versa when it is decreased. Now, let's focus more on internal liability. This is the example just now I discussed. Uh, just now I explained this. Let's see with an example. Now, capital. Whenever the capital is increased, it is credited because the additional fund creating the additional obligation on the business to repay it back to the owner. Now let's say for the personal purpose, owner withdraws the fund. It's a it's also known as drawings. When the owner draws the funds for the personal use, then it is debited because obligation reduces to the extent the amount is drawn by the owner. Now let's see the second component, profit. Now, whenever the profit increased, obligation will also increase. Now, how does the profit rises? Income minus expenses. When the income increases, let's say, an example, 50 lakhs profit arises from 30, 80 lakh, 8 lakh expenses, 8 lakh income minus 3 lakh expenses. Now, the same we will take an example. Let's say income increased to an extent of 10 lakhs, 10 lakhs, and let's assume that expenses remain the same, then profit profit is equals to income income minus expenses. What happened? From 5 lakhs, it increased to 7 lakhs. When, therefore, whenever income increased, we credit the transaction. Now, we'll take the same example and we will see how when expense reduced, let's say expense is 1 lakh now, expense is at 1 lakh, then what happens to the profit? From 5 lakh, it increased to the extent of 7 lakh. Therefore, therefore, whenever income increase and also expense decreases, we credit the transaction. And you will see the same effect when the expense increased. When the expense increased, let's see the same example with an explanation with increased in expenses. How does it affect the profit? Now, whenever expense increased, let's see how it affects the profits. Let's say profit expense is extended to the 5 lakhs and income remains the same as 8 lakhs. Let's see the effect on profit. How does it influence? See, this is how the initial, this is the initial, then this is when income increased, and this is when income increased. Let's put it as green. This is when income increased and expense decreased, the result of profit movements towards up, which means increased in profit. Therefore, we credit the transactions whenever the income increases and expense decreases because it affects on obligation to repay it back to the owner by influencing the profit to the extent of in additional profit, increase in additional profits. Now, the second scenario, when expense increased. Whenever the expenses are increased, it will influence the profits to go down. Therefore, the obligation will go down to the same extent. Therefore, we debit the transactions of expenses. This is the influence of increase and decrease in income and expenses on profit. Now, let's see the same effect on drawings. How does drawings influence the transactions to debit and credit? Now, whenever the drawings are decreased, or let's say drawings never decreases, we'll remove this. Huh. Whenever the drawings increases, what does it influence on capital or obligation to repay? Let's say the capital, let's say the capital is one, let's say the capital is 1 crore and drawings to the extent of drawings to the extent of 50 lakhs. What does it say? Then the obligation increased or decreased? The obligation decreased to the extent of 50 lakhs, which is drawn back by the owner. Therefore, we debit the transactions whenever the drawings are occurred in the business. This is how the debit and credit rule fundamentally apply. Basically, which is owned or debited, which is owed or obligation to repay back or credited. This is a summary of what we discussed till now. This is what it is. Assets are debited because it is owned, liabilities are credited because it is a creation of obligation to the entity. Therefore, it is credited. And we saw how. Then, what is the effect of expense and what is the reason? Sorry, what is the reason to debit the transactions of expense and incomes? This is what we discussed. Expense and income and expense influence the profit, move upwards or downwards. Therefore, we debit the transactions of expense because it reduces the obligation. Income, we credit the transaction because it influences the obligation to increase. Therefore, we credit the transactions of income. This is how fundamental rules of debit and credit is applied in each transactions. Let's see in a next video with the application of these fundamental rules through passing the journal entries or recording the books, recording the transactions. Thank you.